Well, the holiday present of tax reform promised by the White House was delivered on time. And now, as the wrapping continues to get ripped off, we're finding out more and more about the impact of the new law. And now, more companies are coming out with figures on how their bottom lines might be affected, positively, negatively. Morgan Brennan has a look.
Corporate America is finally beginning to release some hard numbers regarding tax reform, or at least the immediate impact to the balance sheet. Among the immediate winners, insurer Chubb, which expects a bottom line boost in 2017, and German automakers Daimler and BMW, though BMW added it couldn't quantify the tax effect for 2018 just yet. These announcements coming after FedEx kicked off the trend last week, saying reform could add $1.5 billion in profit to fiscal 2018 before the bill had even become law.
We're encouraged by the Tax Cuts and Jobs Act legislation advancing in Congress at this very moment. This legislation offers pro-growth, pro-business tax reform solutions that will power the economy, increase business investment, expand job opportunities, and enhance incomes and improve U.S. competitiveness.
But there are near-term losers as well. Big banks warned they will incur charges. Barclays, Credit Suisse, Bank of America, and Citi, which earlier this month warned it could take a hefty $20 billion write-down. Earlier today, Royal Dutch Shell said it too would log a non-cash charge. It's all one-time hits tied to the valuation of either deferred tax liabilities or deferred tax assets. With deferred assets, companies can use losses from one year to offset future taxes. But those aren't worth as much on paper, with the corporate rate falling to 21%. For deferred liabilities, which most big corporations have, the opposite is true.
Once companies start incorporating the tax benefits and getting those one-time pops, it might be the 1 year where earnings expectations actually are lower than what we end up seeing for the next year.
Overall, companies, including some of those big banks, are mostly upbeat longer term, saying reform will positively impact future U.S. earnings. And if the economy grows, that could benefit them as well. But it is an adjustment that could mean some big and unusual numbers when earnings season gets underway next month. For Nightly Business Report, I'm Morgan Brennan.